G'day folks, welcome back to Pete's Investing. It's March 18, 2024. This is the Bitcoin analysis. Now there is a overall bullish trend for Bitcoin, although there is a retrace happening in the near term, so we'll take a look at that in more detail. Plus, we're starting to introduce a new trend table, which covers not only Bitcoin, but all the other major commodities and also some Forex currencies. So this is the table here. So we're looking at various instruments, including Forex. I'm not going to cover all these today. I'm just going to go through these I'm going to go through the table in all my videos to give you an overall trend analysis in terms of where each of these instruments is going. So looking at it here, for example, on Bitcoin, we've got going long on the monthly and weekly, although it's broken to the downside on the daily, and that could be possibly a start of a bigger retrace to the downside. So for Bitcoin, what we've got here on the weekly, daily and hourly charts, on the ADX, it's showing bullish movement on the weekly, bullish on the daily, and it's just going short on the hourly chart. On the CCI 150, you can see there it's broken up past this moving average band, and that's a bullish sign. On the daily, it's actually broken below. That's a bearish sign. And on the hourly, you can see there it's kept falling off in line with that divergence. We had a divergence there on the 1 hour chart, and it's actually come back down from there, and that actually is reaching, if you draw a Fibonacci from that low to that high, that's where that target area is made, this one here. That's a 23 to 38% level, Fibonacci retracement level. Now it bounced off that 23% and made a slight bounce to the upside, but you can see there it's starting to possibly take further downside. The CCI on the hourly is still falling off, so no sign yet of a recovery on that divergence. In terms of a trading idea, we've got this using the daily chart as a trend indicator, and I prefer to use the weekly, especially when the weekly and the monthly and the daily are aligned. But here, for example, looking at the daily when it was going bullish, you would have taken long trades from that period there on the daily. You can see that I've got the back test started at that point on the 26th of February, and you would have stopped taking long trades when that CCI broke into that moving average band. And from that point as well, you would have started taking short trades. So what I've got here is two different strategies. One is the average down approach, one is the stop loss approach. So going long up until that point when you would have pulled out of the long positions, the average down approach generated 9,261, and the stop loss approach on the longs generated 2,679. And you started trading on the short positions when it breaks below the moving average band. The average down approach has generated so far 2,075, and a stop loss approach has generated 1,111. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.